Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. So crypto this week. After a typically weak September for crypto markets, which is normal, October, or what's been called Uptober, started with a bang. Yeah. So we had a 10% rally literally on the first day of October. Okay. So you can see here, we've been chopping around, consolidating into this support zone that we had flagged between, 38.5 and 41,000. And we've had a really nice, strong impulse off that support zone. Okay. And there's been some news flow. I was saying we need a bit of news flow to provide the catalyst, but the price action was looking good. We were seeing bullish divergence in the momentum. We were doing it at a key support zone. All the stars were starting to align. We just needed something to light the match, right? And we kind of got what we needed, right? We got the China ban happened initially. We shrugged that off. Okay. And then you had Jay Powell come out last week in his testimony and say no intention to ban crypto. Those were the exact words, unlike China, right? So, he did stress the need to regulate stable coins, right? But arguably that's going to help mainstream adoption of crypto in general, right? You're not going to get that mainstream mass adoption without people feeling like it's being looked over by some sort of regulators, okay? You're going to get the revolutionists going, yes, crypto is the only free asset, free market asset. But really, if you want proper institutional adoption, I don't think it's a bad thing if they start having a look at stable coins. But the no intention to ban crypto was a great catalyst. You've also got rumors coming that the ETF approval in the US is potentially going to hit the tape 18th or 19th of October. I can't confirm or deny, obviously, but the SEC are going to give some sort of decision on that. I think the market's getting optimistic about that. We had said last week that how is the US going to react to the China ban? Are they going to do the same thing, or are they going to use that as an opportunity to become a front runner in crypto and, on the leading edge of this innovation? And it seems that they're starting to show a few signs that maybe they're actually going to embrace this rather than reject it, like China seems to have done. Okay. And then other pretty bullish sort of things out there were El Salvador, after making it legal tender, which we all know about, within a month, they've got massive adoption through their Chivo wallet. They've given some $30 incentive for people to kind of sign up, and they've got almost half the population into that, basically, right? So, now they don't have all of their wealth in Bitcoin. They got a free $30, which obviously is why they got involved. But the point is, the technology's there. They've rolled it out. People have now got these wallets, and they're allowed to actually spend that Bitcoin and transact in the whole economy, basically, right? And they're being encouraged to, which is a very positive sign. Okay. They've also started using volcano power for mining, right? Which is pretty interesting. Yeah. So they're really going for it and trying to kind of encourage people to really adopt this stuff and giving business incentives and stuff like that. You've also got the Lightning Network adoption flying, right? So exponential growth in Lightning Network adoption, which is layer 2 for Bitcoin. And you've got like Twitter tips integrating that. So you've got massive platform like Twitter integrating the Lightning Network and allowing kind of people to give each other Bitcoin and stuff. It's pretty positive, okay? So you had the technical bounce. I mean, that type of move from 41 to what now 50,000. I mean, that you can't really not call that an impulsive move, I think, right? So if that is the start of the next impulse higher, then, you know, a break of this 53K level seems relatively imminent, basically, right? So yes, we might get a pullback given that we've had a nice little run, but that's really the level we're eyeing up is 53. If that breaks, that probably gives us room to that level at around 60K in relatively short order. Okay, so that's what technicals look like to me on Bitcoin. If we look at the same thing on Ethereum, hasn't been quite as exciting a bounce that on that leg higher, certainly in the last few days. I mean, it's been a decent bounce, don't get me wrong, right? We went from 28 to 35, 34, 35. It's not bad, but we still got a bit of room to make up this kind of move to this major resistance around 4,000. Okay, so I think 4,000 is the key level here. That's the one that really needs to break for us to propel this thing to God knows where and the next real bull wave in Ethereum. But you know, that is the level we're eyeing up now, I think 4,000 for some point in October. Yeah. If we look at the cross rate, it's been coiling, right? So recently the cross rate had a little dump there, but it's coiling. I wouldn't say it's broken down. It hasn't broken up either. So if we break out of this little triangle to the upside, then a move to 0.08 is the one that we're looking for. That's easily 10 to 15% outperformance on Ethereum if we get that break. So watch out for that break, because if that break comes, then you're going to be wanting, if you're going to do any tactical trading, you're going to want to be in Ethereum rather than Bitcoin, basically. If it breaks down, we're going to be looking for 0.065 to hold. Otherwise, you know, there's some room for that spread to underperform, basically, right? But for now, I've got no reason to think we've got an imminent breakdown, basically, right? For me, this looks relatively positive still. We're consolidating, and I'm just waiting for that breakup to then see that the Ethereum price really accelerate as I expect it to do at some point. Yeah. Okay. So that's what I'm looking at on technicals and on price action in crypto. Okay. If we then talk about the on-chain stuff that's been out this week, you know, I wouldn't say there's anything too sort of, you know, conclusive. I mean, the interesting charts for me that kind of stood out, I'll share them with you. Let me share the charts. So on the on-chain stuff this week, we've got this net unrealized profit and loss graph. Okay. So what this kind of says to me is, the way I see this is that if there's a bunch of unrealized profits across the on-chain metrics, that's going to provide a bit of a headwind, because there's going to be a lot of people tempted to sell, especially at the first little sign of dips. Okay. So the fact that if you look at this number and the unrealized profit is you know, pretty close to this mid-range level, and it's not anywhere near these high levels that it's reached where we've seen tops in price, then I'm pretty relaxed right now, right? That's, for me, that's making me relatively bullish that the ultimate topping point of this kind of up wave is still pretty far away, basically, right? So I think the idea of an 80 to 100K range for where this next bull wave is going to top out is consistent with what we're seeing in this chart of unrealized profits getting to a level where they provide a bit of a headwind, basically. All right. So that's kind of how I read that chart. And then the other chart that I found interesting was this one, was basically the spent volume and the age bands, right? So it's kind of like the on-chain volume that you're seeing of coins moving around, how old is it, basically, right? And it's basically saying that older coins, which we're calling anything 1 month and over now, okay, they are a relatively small proportion of that volume that's transacting, okay? And so that's encouraging. And it's just basically saying people who are holding coins for longer than a month are not playing around with this. They're not spending their coins. They're not taking money off the table. They're just sitting and hodling it, basically, right? So that's that hodling behavior, which is, we see a lot of things in the on-chain metrics over recent sort of weeks and months are showing us more and more conviction of the hodlers, right? So the hodlers' conviction is not really being impacted. And why would it be, right? You've been in accumulation phase in the 30K area. The market started to recover now. We've gone past the China ban. The hash rate's recovered. The network has moved on from that China dependency, and the price action's okay, right? The price action is doing pretty well. Yes, we're going to get dips, but as someone who's bought, a month ago or even longer, why are you going to be in a rush to sell right now? You're probably buying because you're looking for that next breakthrough all-time highs to the next level, wherever your target may be. But I think 80 to 100K is going to be in a lot of people's minds as a first target for the stuff that they've accumulated at some point this year, basically. Yeah. So that's my read on the on-chain metrics this week. Yeah. And now we'll do a quick look at what the vol analysis is telling me. Right, here we go. So, okay. So we've got, what we got going on in vol. So realized vol has had a bit of a bounce. So if we look at, from sort of that, obviously we had a 10% update last week, right? So it shouldn't be a major surprise to anyone that realized bounced, right? So we've had, this is the Bitcoin one. It's gone from 55 realized, it popped back to 70 odd. And same sort of story on Ethereum. So like this, if we look at implied, say, look at 30-day realized on Ethereum is actually trading above implied. Okay. Now it was trading significantly above, nearly 10 vols like yesterday. Okay. Or a few days ago. It's that spread has now tightened a bit as people have realized that Ethereum Gamma was just trading too cheap. But you don't see that very often. You don't see implied trading a discount in the front end in Bitcoin unless you have this big move and the market's now just thinks that's over. And people you had a bit of spot vol correlation going on where implied vols would go up in crypto when the market went down, and they'd go down in crypto when the market went up, because generally up moves were a bit more moderate than the down moves because people were worried about a tank. Yeah. But now you've had a 10% rip. So you've had really high realized on the way up, which you haven't seen in a while. And implieds have just kind of done what they were doing when the market normally goes up, and implieds have overshot to the downside. So now the market needs to just kind of rebalance itself and realize that actually we could get more upside out of this market, and realize could stay relatively high as we're making new highs. So people are now rebalancing and kind of buying that gamma back, basically, right? So that's kind of what we've been seeing. But you did have a momentary point where Ethereum gamma probably got a little bit too cheap there, basically. Yeah. So that's what I've been seeing on realized and implied. I mean, skew's been very interesting as well, in that you've had, whereas in previous weeks I'd mentioned a bit of a dispersion in skew, right? Where short dated skew was very heavy for the puts, long dated skew was very heavy for the calls. You've had a massive convergence. That was a divergence. You had a massive convergence where short dated skew has absolutely collapsed, right? So you've gone from highs of 15 to 20 vols for puts over in the 1 week to 1 month maturities. You've got 1 month now back to zero, right? Well, actually, no, 1 month has flipped to be now for the calls. So in the 1 month maturity, the 25 delta calls are trading more expensive in vol terms than the puts by 2 vol points. Okay, so it's completely gone through the zero line, flipped. The 1 week stuff is still marginally for puts, 3 vols over. So that's showing us that the bullishness is coming back. People are buying short dated calls to express the breakout higher, which makes sense given that we're in October. October and November are seasonally good for crypto. People are going to buy short dated calls given that the implieds have come down quite a lot as well. So a lot of reasons why that makes sense to see that upside flow. But look what's happening to the longer dated calls, right? The longer dated calls that were, 10 vols over for calls, I mean, they've got crushed to about 5 or 6 vols over. So for me, that's quite interesting, right? So you're seeing that the long end calls are getting cheaper, like relatively. Yeah. So people are rather expressing their views now in short dated calls than they are the long end, right? When the market was a bit more bearish and a bit more nervous, people were buying upside calls in the long end, right? Now that the market's actually feeling more buoyant and we're looking at a potential breakout, the flow is coming to short end calls, and longer dated calls are a bit more under pressure, basically, right? So I found that pretty interesting there. Yeah, and I think all of that is kind of confirming that the probability of a break higher is increasing, basically. Yeah, that's the way I would read that. Yeah, because people's conviction in holding short dated longs, that conviction is rising at the margin, and that's quite a bullish sort of dynamic. Yeah, and then the last sort of thing to kind of look at is probably, well, a couple of things. So the term structure, if we look at the 1 week, what it looked like yesterday and what it looks like now, that's pretty steep, right? So you got short end stuff in the 70s, you got December in the 90s. So fairly steep contango, right? And again, that's a little bit unusual when we've just had a 10% rally, right? So normally if you got 10% rally in recent memory, you'd think the gamma is going to trade at a bit of a premium. And so you get a flat to backwardated curve. But we're not getting that, right? With the gamma is actually still quite low, right? We've had a little bit of a bounce from 68 to kind of 72 in the super short dated this week. But for me, that is still too steep, probably. If we've got a proper breakout coming, that looks probably too steep. And that kind of leads us on to the trade that I've been doing, which is, that you guys, again, subscribers will know. So this chart is called the block sniffer from Genesis Volatility. And it says basically over the last week, where were the flows, right? So you got this pie chart showing me I've got 80% dominance in call flow. So a bunch of call trading activity as the market's breaking higher. Shouldn't be a major surprise, but that confirms the bullishness, okay, right? And then this kind of helps you, the color coding kind of shows you which expiries and strikes the flow was centered in, basically, right? So you can see that if you look at the major sort of expiries, you got 29 for Oct in pink, where you got big strikes around 50K, 55K. So that's telling us that in that 1 month bucket, you've had flow coming in, big flow, big block trades coming in those strikes. So those are the type of strikes people are going for. You then got November in blue and dark blue and December in light blue. And that flow is kind of more concentrated in these higher areas where we got 70,000 to 100,000, right? And also if you look into some other metrics or you look at some of the market commentary, a lot of that has been more call spread buying, basically, right? So obviously if you're going to go longer dated, you're going to pay more premium. The way you get leverage to that premium is you buy call spreads rather than just outright calls, which are decaying on an expensive vol. So it makes sense that people are buying call spreads in November and December, and they're doing them using those sort of strikes, 70 to 100K. But when they're buying the outright stuff in October, they're buying these 55s and these 50 strikes, right? Which makes sense. So you can kind of see, right? People are doing similar trades to me, right? They're buying that 50K area in October, and then in the call spreads that they're selling, surprise, surprise, the strikes that they're selling are these 100K strikes, basically. So the combination of all of that is the trade I've got, where I buy the 50K Octobers and I sell double the 100K in December, basically, right? So but it's quite nice to see those flows actually after the event kind of almost confirm that we're holding something that is a pretty sensible trade right now, I think. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.